Namaste. In my previous video, I mentioned that it is better to convert the data into a pictorial form, which helps us in taking an investment decision. And we have seen how the same can be converted into various types of graphs. Now, with the help of the graph, we will try to ascertain how to make an investment judgment. Now, as you can see, we have a bar graph here. I mentioned earlier that the very basic purpose of investment is to make profit, and profit can be made by buying at low and selling at high, or selling at high and buying at low. Fine, things are easily said than done. We should know ways and means by which we can judge whether we can buy or sell. When to buy, where to buy is the question. As you would see here, the chart, it has going up for some time and going down for some time. From here, it is going up. From here, it is going down. So on and so forth. Then how to know whether the stock has potentiality to move up or not? We can see that here, the stock has come down from here to here. So this is the place where from the stock started moving again up to this point. So this is the point what we call as bottom. That is the first thing. And as you would see, the stock moved up for some time and stopped here and started going down. So this is the point where the stock started moving down is what is called as top. So we have first two basic terms defined. One bottom here and another top here. And we will try to identify the successive tops or bottoms. Here we have one top, and here again we have another top. Here we have another top and another top here. Same way, we have one bottom here, another bottom here, another bottom here, and another bottom here. Like that, when each bottom, successive bottoms, let us suppose this is bottom 1 and this is bottom 2, this is bottom 3 and this is bottom 4. Now, when these four bottoms successive to each other are lower to each other and the tops successive top 1, top 2, top 3 and top 4 successive tops are also inferior or lower to each other, we can say that the stock is in downtrend and has the potentiality to move down and down. And in the same way, here the stock moved up. Let us say bottom 1, bottom 2, bottom 3, so on and so forth. Here, I will go somewhat towards backside where it is more visible. Now you can see here we have one bottom, another bottom here, one top here, another top here, another bottom here, another top here, and another bottom here. As long as successive bottoms are higher to each other and successive tops are higher to each other, the stock is said to be in uptrend. Same also the case here. You can see one bottom here, another bottom here, another bottom here, another bottom here, another here, like that. These four bottoms are higher to each other and tops are higher to each other. Thus, it is clearly uptrend. Now we have a definition uptrend and downtrend. What is a trend? First, let us try to analyze. Trend is a particular direction in which a particular thing is developing or moving. So here, the direction in which the price is moving is called as uptrend. So how can we define an uptrend? As long as successive bottoms are higher to each other, successive tops are higher to each other, like this and like this, the trend is said to be up. That we call it as uptrend, and we can make a buy here and keep the stock with us till it goes up. And same way, when it comes down, it is said to be downtrend, and we can sell the stock and can buy again here. It is the same thing. Sometimes it so happen that the successive tops or bottoms will be at the same level, which do not give any signal. That kind of signal is called as sideways trend. It shows the indecisiveness of the market, whether the stock is uptrend or downtrend, nobody knows. So it is always better to wait till a direction is taken. Here you can see the tops are almost, these three bottoms are almost at the same level and the tops are at the same level. So it is an indecisiveness. So we need to wait till a breach is taken place either upside or downside. Here you can see. Now the tops and bottoms are same at the same level. So we wait till something happens. The price moves either side. Till then, it is not advisable to enter. Now you can see once the price has come down to this level, it went down and again it went up and could not go upside this line and again it came down. So this is called a sideways trend. So we have three trends, one uptrend, one downtrend, and again one sideways trend. It is our task to identify how to retain the stock or enter into a particular position, stock position, and hold on to it. So for that, what I do is I draw a trend line here from the bottom. Always remember that for uptrend, it is always advisable to take bottoms, and for a downtrend, it is always advisable to take tops. So here the stock is moving up, one bottom here, another bottom here. So the stock is in uptrend. So we will take bottoms and drive. And if you go through standard textbooks, it will be mentioned that you have to take two bottoms which are clearly marked, demarked, separate, well apart, etc., etc. But yes, we have the chart with us now from here to here. Now we will know that we have one bottom here, another bottom here, another bottom here, etc. But let us suppose that you don't have the chart. You have the chart up to this extent only, not the future one. Then how you are going to determine about the other ones? So what I consider is first I draw with the initial bottom a trend line to the next available bottom and wait. And if another bottom takes, I will extend another line to that. So yes, we do not know the future bottoms at this juncture of time. We start with whatever is available with us and try to analyze the stock. So doing that, I first draw a trend line starting with the bottom which is available here. Now you can see we have a bottom here. We have another bottom here. So first I connect these two bottoms. Later what I do is I click on the right and extend it to right. See this. Now I again what I do is I create a parallel line. Here again I will extend this to the right. Now you can see I will again extend this. I will create another parallel line and extend this. Right. Now you can see once this bottom, I wait for the second bottom here the second bottom, I wait for the second bottom, and when the second bottom is formed clearly, when the price is above this trend line, I will buy into the stock and wait here till here where the price breaches the trend line, and you can see now it is coming down. So here I close the position. Here I close the position. Here I bought here actually. So let us assume that I bought at 10,651 and it breached here 10,640 is the low. Let us suppose I sold at 10,640, thereby I lost 11 points. Very good. And next this I wait for the bottom to take place. So a bottom formed here. Now I draw another trend line from this bottom to that bottom. Now from this bottom I draw a trend line to this bottom, and now again I will extend this. Right. I create a parallel line and I extend that and wait. Okay. Now I have drawn bottom. I have drawn a line here, and I will enter into the stock here. Now the value is high of the value price is 10,695. Let us assume that I purchased it here. Then once this parallel line above this is breached, I am suspicious about the price action. On the day it breached here, and next day I try to sell it. I sell it at the low of the day. Let us assume 10,835. Here I bought at 10,695. Here I bought at sold at 10,835. So 695, 835, 535, 40 points profit. The 11 points loss I made is now made good here. Thereby the trend line holds good, and when this second line is breached, I become suspicious and generally I try to sell it. And when again I wait for the line to be breached here, you can see the line is breached here and the stock came down and the stock made another bottom here. I make another trend line again here, from here to here. I draw a trend line and I extend it. And I create one parallel line and I extend it again. Now you can see, as long as this when this line is formed and extended, and immediately this line is next day it was breached, and we wait till this line was hit here by the previous line was here, so we wait till this again it was hit here, and we wait till this area or till this area, thereby not losing any point. And if at all we can take higher risk, we can wait till this extent where the original trend line is breached and the share made low here, bottom here. And let us suppose that we bought here at 10,752 and here 10,630, around 120 points loss. If we are a high risk taking individuals, otherwise we would have closed it here itself. That would have resulted more profit. When you see the same line is extended into the future, it acted as good supporting line or good resistance line, breaching of which made reversal the price action of the stock, which is evident. So this way we draw trend lines first to ascertain whether the prevailing trend has capacity to extrapolate into the future, or is it not worthy taking a risk depending on it. So like this we make trend lines, and which helps us in identifying, determining the continuation of the trend. More in the next video when we meet again. Thank you.